In this video, we're going to go over a recent trade made in Facebook, FB, and there are two entries here. One a pullback entry within the base, and the other entry is more of a pure swing trade type entry, which is after the breakout, after there's been plenty of momentum. So first off, why Facebook? Well, after a big gap up in July, Facebook went on a rampage and basically almost doubled here over a few months, and that's the kind of stock we're looking for to enter on weakness. After a big move up, we want to see 20% consolidation over at least 4 to 6, 7, 8 weeks, something like that. What we're looking for though on a pullback is a washout. We're looking for a consolidation, a washout of buyers at logical level. So for something like Facebook, if it holds up here at the 50 MA, we're looking for a washout, and we get sort of some kind of washout here below the 50 MA on this bar, but the real washout comes a little bit later on right here, and you can see finally a spike in volume as anyone who's in from around this first touch of the 50 here, and that itself is a decent buy point. One could have gotten long in here and maybe been stopped out, but getting stopped out of a leader and getting back in is just a part of doing business as a trader. A lot of people are washed out in this area with this undercut, as well as the prior swing low here. And whenever you undercut a prior swing low, that's where a lot of stops are usually placed. So a bunch of stops were run, and then it's something we're taking a look at on a potential downtrend line breakout, which is dependent on how you draw. I like to draw what's known as or we call a dirty downtrend line, whatever makes sense. Some people might draw the downtrend line to include these highs right here. I don't know if that makes more sense than just leaving it where it's at with this anchor right here, and you see false move above that high, downtrend line, another false move above the downtrend line, and then more stalling, and then you get your first breakout above the downtrend line that holds, and then 1129 we see the price action holding above the 10-day moving average. After it stays there for one day, we decide to enter the next day on 12.2, and basically at this point we're just looking for this low to hold up. On 12.4 it breaks above the 20-day moving average, which is a good sign, but once again stalls at the 50-day MA, and after a day sideways it reclaims the 50-day MA on a pickup in volume. That's not amazing volume, but there's a pickup in volume. Then there's another test of the 50 right here with the close off the lows of the day, and then right away it takes off. So not much hesitation in Facebook, and it's one of those stocks that if you weren't actively buying around the break of the downtrend line or the move back through the 50 MA, you pretty much have no chance to buy, because if there's one thing we're not going to do after trading so many years is we're not a big fan of buying up here. And so after finding support, the 20-day EMA again goes up to this 58 level and stalls. So at this point we're no longer dealing with a momentum breakout. It looks like it's losing momentum. The next step is at this point, just make higher swing lows right here. That's generally what I want to see happen, is higher swing lows if the price action fails to move out to new highs. And as you can see, that's what generally happens here until this day right here, 124. Something's wrong, the characters change, and there's a pullback to the 50. So if you did buy the breakout to new highs up here, you had to have about a 7% stop in place. Any kind of stop that's in between like 5 to 10% is going to be decent for this type of trade, but obviously the tighter the better. But having a stop around 7% away isn't that bad, but it sure is a lot of shakeouts for one to sit through, especially when you're buying up here. So all this price action was heading into earnings report, and there was a favorable reaction to earnings as Facebook gapped to new highs, and we're basically at this point waiting for the action to pull back in or go sideways for a few days to add to the position. And remember that gap ups, when they're big volume there from especially breakaway gap ups, signs of strength. This is something we want to be a part of on the move out, so it's time to buy. So what we like to do whenever there's a gap up is simply wait for a few days of tight consolidation or some sort of pullback to a moving average, such as the 10-day moving average. On 2.5 we get a bit of a pullback and then a reversal bar. It'll undercut the prior low, and then you get on 2.6 a tight inside day. So on the night of 2/6, we placed a buy entry in our newsletter, the Wagner Daily, over the high of 2/6, and we were filled at 62.91. The next day, as Facebook rallied higher on a decent pickup in volume, adding to our position, and as you can see, it continued to run higher on decent volume here. Sort of stalled out right here around 68, and then pushed higher, continually holding above the 10-day moving average. And after stalling out at 71 here for the second time, on 3/7, we issued a sell order on the open for Facebook. So the next day we closed out the position on the open, and over the next few days it stalled and pulled back into the 20-day moving average. So again, we sold at the open on 3/10 right here, which netted us a gain of 12.5% on the swing entry, which was right here on 2/7 as a 12.5% gain, and on the original entry from 12/2 right down here, the gain was 49%. So that is what we like to do. So this is the way we like to trade our A-rated stocks, and these are stocks that have great fundamentals along with solid technicals such as relative strength ranking and a strong uptrend. If you'd like to learn more about our style of trading, you can visit our website at morpheustrading.com. Thank you for joining us, and good luck with your trading.